August is just around the corner, and this month brings 5 very specific money situations that are going to hit American households hard. Some involve deadlines that are already closing in fast, some involve new fees quietly appearing at the point of sale, and others are payments pulled directly from your account on autopilot, whether you are paying close attention or not. Today I am taking you through all 5 in order of how urgently you need to respond, beginning with the one that demands your attention right now. My name is Robert Caney. I am a licensed estate planning attorney. And before we dive in, the Social Security Survival Guide puts every rule I discuss on this channel into one clear 44-page document written in plain everyday language. Current 2026 numbers, every relevant form and figure. The link is waiting for you in the description below. Now let us walk through your complete August financial checklist together. Item 1. The IRS penalty refund claim you can still submit. This is the single most time-sensitive issue in this entire video. A federal court ruling known as Kwang versus United States, decided in November of 2025, determined that the IRS wrongly assessed failure to file penalties, failure to pay penalties, and underpayment interest charges throughout the COVID-19 federal disaster period, which officially ran from January 20th, 2020 through July 10th, 2023. The court concluded that under the section of the tax code that governs federal disaster declarations, all tax filing and payment deadlines throughout that entire window should have been automatically paused, meaning the penalties and interest the IRS collected during that stretch may have been assessed in error. The National Taxpayer Advocate released an urgent public statement indicating that tens of millions of taxpayers could be entitled to refunds or elimination of these charges, but the relief does not happen on its own. You are required to submit a claim yourself. The original cut-off date was July 10th, 2026. If you have already passed that date, do not assume the door is permanently closed. Submit your claim without delay. The statute of limitations argument favours those who file as close to the deadline as possible, and submitting after the deadline still protects your legal standing if the appeal is ultimately resolved in favour of taxpayers. The document you need is IRS Form 843, Claim for Refund and Request for Abatement. You can download it at no cost directly from irs.gov. Write the phrase Protective Refund Claim pursuant to Kwang versus United States clearly across the top of the form. Submit a separate form for each tax year in which you paid penalties or interest connected to obligations that were due between January 20th, 2020 and July 10th, 2023. Send it via certified mail to the IRS Service Centre that handles your filing address. There are 3 important things you need to understand going into this. First, the Kwang decision is currently under appeal. The refund is not a guarantee at this point. What submitting the form does is lock in your right to receive that refund if the courts ultimately rule on the side of taxpayers. Second, this applies if you paid IRS penalties or interest charges, not only if you owed unpaid taxes. If you filed your return on time and paid everything you owed but were separately hit with a penalty, that penalty may still qualify under this claim. Third, H&R Block is actively helping clients put these claims together. You are also fully able to file this on your own without professional help. Do not delay beyond this week. Every additional week you wait is another week of unnecessary lag if the final decision comes down in your favour. Item 2. The credit card surcharge that is now hitting you at checkout. The extra fee quietly appearing at the register this summer that most shoppers do not even realise they are now being legally charged. Credit card surcharges, meaning additional fees tacked onto your bill when you choose to pay with a credit card, are now permitted in 48 states as of 2026, and businesses are increasingly turning them on. More than 60% of small and mid-sized businesses now use some version of a surcharge or dual pricing system, driven largely by rising payment processing costs. Under Visa's rules, these surcharges can legally reach up to 3% of your total purchase, and under MasterCard's rules, they can go as high as 4%. A $200 grocery order paid by credit card can now carry an added $4 to $6 charge on top. A $150 dinner at a restaurant can tack on another $3 to $6. Merchants are legally required to disclose these charges before you finalise a transaction, whether that is through a sign posted at the store entrance, a prompt on the checkout screen, or a note printed on your receipt. But required disclosure does not mean you were warned before you walked through the door. The solution for avoiding these charges is simple. Use a debit card or pay with cash. Surcharges applied to debit card transactions are completely banned across all 50 states under federal law. If any business adds a surcharge to a debit card purchase, they are breaking the rules and you have grounds to dispute it. The states that still prohibit credit card surcharges entirely include Connecticut, Massachusetts, and Maine. If you reside in one of those states and notice a surcharge anywhere on your receipt, you are fully within your rights to challenge it. Item 3. The mid-year tax check the IRS never sends you a reminder about. August represents the midpoint of the second half of the calendar tax year, and this is precisely the right moment to confirm that you have made sufficient estimated tax payments so far. The IRS requires quarterly estimated payments from anyone who expects to owe $1,000 or more in taxes for the year, beyond whatever is being withheld from any income source. If your payments fall short, the IRS charges an underpayment penalty, currently running at an annualized rate of 8% on the unpaid balance. The specific trap, catching many seniors off guard in 2026, involves the brand new $6,000 senior deduction introduced through the One Big Beautiful Bill. Many older Americans and even many of their tax advisors have not yet updated their estimated payments to reflect this new deduction, which has the potential to meaningfully reduce taxable income for anyone aged 65 and older. If you have been submitting quarterly payments based on last year's income levels and last year's tax rules, your payment amounts for 2026 may now be either too high or too low. The third quarter estimated tax deadline is September 15th. If you have not already confirmed that your year-to-date estimated payments line up with your projected 2026 total tax liability, including the impact of the new senior deduction if you are eligible, September 15th gives you one more chance to make up any shortfall before it snowballs into a larger penalty come year-end. Run the numbers now. Do not wait until the following April to discover you owe a penalty that a quick August calculation would have allowed you to avoid entirely. Item 4. The insurance premium adjustment being pulled from your account. For anyone currently enrolled in Medicare Advantage, a Medigap plan, or a private supplemental insurance policy, August has a way of bringing a premium change that shows up without any clear explanation attached. Insurance providers and pension administrators routinely conduct mid-year administrative reviews, and some plans begin adjusting their premium deductions in August, either shifting their billing schedule or reflecting a mid-year rate change that was mentioned somewhere in paperwork most people did not read carefully when it showed up in their mailbox last spring. Here is the practical step to take this month. Pull up your bank statement or check the deduction line on your Social Security benefit statement and compare the August amount directly to what was taken out in July. If the figure has changed, whether it went up or went down, contact your insurance provider and ask them point blank why the amount changed and whether this is a permanent adjustment going forward or a one-time catch-up deduction. One-time catch-up deductions occur when a billing timing change results in 2 months of premiums being pulled together in a single month. A permanent rate increase is an entirely different matter and deserves a direct question about whether it reflects a plan modification you actually agreed to at any point. You have every right to understand exactly what you are being charged and the specific reason behind it. Item 5. The SSI payment timing shift every recipient must know about. August 2026 creates a calendar situation that directly affects people receiving supplemental security income and that takes people completely by surprise each time it comes around. As discussed in the opening segment of this channel's August payment video, your standard August SSI payment will arrive on August 1st just as it normally does, but your September SSI payment will be delivered early on August 29th because September 1st falls too close to a holiday weekend, and the Social Security Administration is required by law to send that payment on the final business day before the weekend begins. This means 2 separate SSI deposits land in August. Absolutely nothing arrives in September. If you go ahead and spend both August deposits during the month of August, under the impression that you received bonus money, you will find yourself with an empty account in September when your standard bills come due. The action step for SSI recipients this August is straightforward. When that second deposit lands on August 29th, put it aside entirely and do not touch it until September 1st. Mentally treat it exactly the same way you would treat your regular September payment arriving on its usual schedule, because that is precisely what it is. Your complete August financial checklist summarized. File IRS Form 843 without delay. If you paid any federal penalties or interest on tax obligations due between January 20th, 2020 and July 10th, 2023. Write protective refund claim pursuant to Kwang versus United States at the top of the form and send it certified mail. Understand that credit card surcharges are now active and legal in 48 states, and that switching to a debit card or cash removes them completely. Confirm that your year-to-date estimated tax payments match your projected 2026 tax liability, factoring in the new $6,000 senior deduction if you are 65 or older, ahead of the September 15th third quarter deadline. Review your August insurance premium deduction against July's amount and reach out to your insurer if anything has changed. And if you receive SSI, treat the August 29th deposit as your September budget and set it aside completely. I will see you in the next one.